It's a lie loan.
Imagine walking into a bank to apply for a loan and they hand you a form asking 2 questions. How much do you earn and what are your living expenses? So you pick up a pen and write down, I earn $1 million and my expenses are $300 per month. Even though you actually only earn $45,000 a year and your expenses are $2.5 grand a month.
At this point, the credit officer looks at your answer, smiles, and gives you that home loan without even questioning the truthfulness of your answers. Sounds ridiculous, right?
That's exactly what the media is claiming is happening in the housing market at the moment. If you haven't been paying attention to the real estate news, you might have noticed that there's a lot of hype about liar loans and how they're going to crash the Australian housing market.
According to a UBS survey done in 2020, over 40% of people said they lied about their income and expenses on their mortgage applications. And the value of these so-called liar loans is a panicking $500 billion.
$500 billion. You know, make it, that'd be cool.
It seems like we're headed into a property Armageddon.
So should you be worried? Is the Australian property market gonna implode just like the US market did in the GFC?
Or is it another pathetic attempt from the Australian media trying to whip us up into a frenzy over nothing?
In this video, we're gonna take a deep dive into this liar loan crisis and why it's complete and utter nonsense.
Yeah, we're gonna show you why 2 in 5 mortgage owners think they lied on applications and how these so-called liar loans will not crash the Australian housing market.
Before we start this video, if you find it helpful in any way, do me a little favor and hit that like button below or leave a comment for the YouTube algorithm. Just a little gesture like that can make a huge difference to the channel, and if you haven't already, hit that subscribe button. Thanks you guys, it really means a lot. So let's dive in. First, let's take a look at why the concept of liar loans is absolute nonsense.
To put it simply, banks don't just take your word at face value when they're looking at your home loan application. They're not going to just accept stated income. They did a few years ago, it's called LODOC. It doesn't exist anymore. They validate your income from your pay slips and 3 months pay credits going into your bank account. They even have systems that look at the optical characters, they recognize it, they go through the statements and check it out. If you're earning commissions, they're going to treat it completely different from regular income, and they'll only consider 80% of commission income.
Likewise, if you're casually employed, they annualize your income and only use 46 weeks in the year to take into account things like annual leave. And if you're thinking about faking your pay slips, good luck. Banks are getting more and more adept at catching fake documents. Like Jayden said, they've got optical systems that read these sort of pay slips nowadays. Some banks will even call your employer to verify the information you're providing and giving them. So it's impossible to overstate your income without the bank actually catching you.
Yeah, interestingly, Nate, there was a story from a couple of years back where there was a racket of people making fake pay slips. They even went so far as making fake websites for the employers. But the bank caught them out, and you know how they found out? Because the websites were a day old. When they called the company, it was the one person who answered the phone calls, and it all unraveled from there. So they have much more sophisticated systems checking this out. It's also on your credit report. There's a bunch of different ways they can verify it to make sure everything matches up and the income on your pay slips matches what's actually going in your bank account. What I think they're thinking about in this liar loan situation for the income is what you actually put in your loan application and your pay. So a common one is you might say, I'm on $50,000 a year. You put $50,000 on your loan application, but when you annualize out your pay slip, you're actually on $49,998 or something like that. You take off annual income, maybe you're on 50 plus super. There's a lot of different interpretations here where it doesn't look like it's the same, but it's the same number.
What about your expenses? Can you understate them? As with your income, it's virtually impossible to understate your expenses and get away with it.
At a high level, all of your data is held on your credit file, and the bank holds 24 months of repayment history on any credit cards, personal loans, any credit you've got, it's on there. They know exactly how much you owe, to whom, and how much you're paying back a month. They know your credit history better than you do. You might have forgotten about that GE interest-free card from a few years ago, and you haven't used since, but it's gonna show up in your credit check. And if you have a bunch of outstanding liabilities like credit cards or interest-free cards with no balance, then they could decline your loan.
What about lying about the number of children you have in order to increase your borrowing power, as some are claiming is happening? Now, we'd be extremely surprised if this is the case. Banks need to see your Medicare card as part of your application. So if you lie about having one less kid so you can borrow more money, this is where they'll actually catch you because your Medicare card shows the number of dependents you have. And what about those monthly living expenses we talked about before? But it's not going to do much to your application.
Yeah, the banks use something called HEM, or Household Expenditure Method, to calculate a reasonable level of your living expenses. If your expenses are too low, then they're just going to use HEM instead of the $1 you put in there instead. And it doesn't stop there. They're going to comb through the last 3 to 6 months of your statements to look for any unusual transactions. If there's anything unusual, they're going to question it. We've seen this a lot lately. It can be for rental, it can be even for funny statements. You're saying, Nathan, party time, whatever. One of our clients, which I mentioned in the video before, they were asked whether or not they had an undeclared dependent child because there was a single transaction there at a baby clothing store. It turned out she bought something for a baby shower, and we started to explain it before the bank would accept her application. The reality is you can't understate these expenses without being caught.
Also, with open banking, it means that you'll be able to share your banking data with third parties that are accredited with the ACCC, and it'll make it even more impossible to lie in the future. Rest assured, by the time the bank gives you your loan, they've made sure that you're eligible. As a mortgage broker, we also ensure that we do all the checks of your eligibility before we even send your loan or application to the bank. This is a double layer of verification. It's not possible to take out a liar loan.
Yeah, not unless you're an evil genius who's willing to commit a massive amount of forgery for the sake of a slightly higher borrowing capacity.
Why make trillions when we could make billions?
And even then, you'd probably still get caught out. If that is the case, then why did 2 in 5 mortgage owners respond to the UBS survey saying that they lied on loan applications?
It's really simple. Most people never actually are 100% certain about their monthly living expenses, and when faced with thousands of forms, they make a rough guess. It's no wonder that UBS admits that most of the lies are people lying about their living expenses.
Most people who responded to the UBS survey are saying that they understated their expenses.
However, as we said over and over, even if you understate your living expenses, the banks will catch you. So that fact that those respondents got a loan means that the bank did their own checks and determined that they were eligible for the loan.
Like I said earlier, the lies on the income side of things almost certainly fall into the same bracket. Uncertainty about how to report income. It's relatively simple to report your income. If you're on a straightforward salary, you just put your base salary in there, right? But if you're getting paid bonuses, commissions, overtime, it's hard to know. It fluctuates week from week. Even if you're casual, it might change from week to week. So again, these lies are mostly due to people misunderstanding how to report their income, not because they're actively trying to overstate and borrow way more than they can afford.
So as with your expenses, your income is verified. So even if you try and pad your numbers with your income, it'll be picked up during the application process. As you can see, this whole liar loan issue is complete and utter nonsense. The Australian housing market isn't going to crash because you forgot to mention that you're spending some additional $10 a month on chewing gum.
Yeah, unfortunately, this one comes up every few years, I feel like, and this is just another case of just trying to spread fear and uncertainty for the sake of more views and clicks. I can understand why they would do that. The biggest fear at this point is that people are lying and borrowing more so they can afford in order to chase up the market. And if they are lying and overborrowing, then their chances of defaulting if interest rates go up are very high. But is this the case?
Are households so overborrowed that the slightest change in income or the thinnest increase on interest rates will result in Armageddon? Facts suggest otherwise. According to figures from the Australian Prudential Regulator, APRA, homeowners increased their offset balances by a massive $205 billion in the first 3 months of 2021. Offset balance reduces the amount of interest paid on the home loan. In effect, home buyers saved $13 billion in interest costs for each year through the offset account. This provides a great buffer when interest rates do eventually go up. In fact, the RBA found that property owners are far more financially secured than renters. So if you are thinking of buying a home, don't let this doomsday conspiracy about liar loans stop you. So what's preventing you from qualifying for a home loan? Here at Hunter Galloway, we get home loans approved. So if you're looking for a mortgage broker and living in Australia, we can help. Simply call us on 1300 088 065 or visit us at huntergalloway.com.au and we'll see you next time.